This conference will now be recorded.
What's up, everybody? I hope you guys had a great start to the week. A lot of opportunity today. You saw that the last week or so, small caps, the momentum's really starting to pick back up. You've seen a lot of money flow. That SPI last week, the solar plays catching a bid, and then today follow through with some more solar and the small cap lithium plays off of that PLL. There's just a lot of action trickling down from the larger caps down to the small caps, and now you're starting to see the broad markets start to show early indications, but still indications of that reversal. And I've been talking about it. We've been outlining it for several weeks now, how, okay, we're in that digestion phase. We need to be patient. It's going to be tougher to have that conviction on options plays on the larger cap stocks like tech stocks, for example. And it took some adaptation for us too. We primarily in the joint account, the account that we are trading with you guys, the one that we're disclosing all of our positions and updating you guys on a daily basis. That was the purpose, has always been intended for swing trades that we are confident in, that we can hold for a day or 2 days or 3 days, and kind of add dips and lower stress, but higher confidence. And the current market, the last couple weeks, last month really, has not been supported for that. So it's taken some adjustments. You saw the drawdown that we had over the last couple weeks. I think our account pulled back somewhere in the range of 4 or 5%, somewhere in that range. Nothing detrimental. Like I say, you don't. If you have the right mindset in trading, you don't lose. It's not losing. It's just learning. And there was a lot of learning over the last couple weeks in the joint account and in my personal account. The same thing in my personal account. In my personal accounts, I had roughly about a 4 or 5% drawdown over the last month. Not anything that's make or break or detrimental to my career or anything like that. It's part of the game, guys. It's nature of the beast. You have this. As long as it's systematic, as long as you have your risk parameters in place and you have your stops and everything's according to your game plan, your personal game plan, it's nature of the beast, guys. But enough talk about that. You guys have heard me talk about that time after time after time. I want to break down some charts, go over some key levels. I want to break down some key levels that I'm going to be watching. I have a lot of charts that I have, but there's nothing at this moment. There's only like 1 or 2 that are like higher confidence. Everything else is more or less just I'm being patient with, and I'm waiting for these levels, but I just want to outline them for you guys, get them out there, break them down just so you guys can see where my headspace is currently at. But with all that being said, let's go ahead, start it as we always start it, by breaking down the SPY. And today I did something a little different. I have my levels outlined already, and I want to just touch base on so the lower level is going to be what I see as where I reevaluate the current construction of the setup. So right now, every setup that you're about to see is a constructive look. I mean, for me, I'm not going to give you a stock or a chart setup that's not constructive. So bottom line here, where my cursor is on each one of these charts that I'm about to go over, that's going to be where we lose that constructive look, so to speak. Doesn't mean it can't recover, doesn't mean I still don't have a watch list. All it means is that the short term loses its constructive look a little bit. The first line you'll see is that first inflection point that I'm watching to break. That's kind of the first, that'll be like the first key spot to scale in and watch for pullbacks and strength on pullbacks. And then if you see a second line, that's like the big breakout spot. And not all my charts are going to have 2 lines above. Some charts are only going to have 1, but Anyways, needless to say, SPY, QQQ. I talked about this last night on video. QQQ, relatively speaking, the tech stocks were the driving force behind the parabolic move that we've seen since the March lows. The 50 to, QQQ is probably somewhere more in the range of like 70%, I think, off lows. Let's just drag this real quick. Yeah, close to 70%. And then we saw SPY, I think, was in the range of like 50%. Yeah, so QQQ, relatively speaking, has been stronger, and it showed earlier signs than SPY about a month ago that we were getting ready for a drawdown, for that digestion that I've been talking about. And what I spoke about last night was that proximity to the 50-day moving average. If you see, I'm just gonna note that real quick one more time. Look at proximity to the 50-day and look at proximity to the 50-day. So the SPY is still kind of floating under it. It had a gap on that. The move today was all essentially under the 50-day, whereas tech was above the 50 days. So doesn't mean much, but it's just something to note, and it's something to keep in the back of your head that, okay, tech is now rounded out. Nothing's confirmed. We're not confirmed that bottom is in, but this rounded out look and these very distinct levels, we've seen like 3 very distinct waves now, and now we're kind of getting through that digestion and we're breaking toward the upside. Again, doesn't mean that the bottom's in, doesn't mean that we're going straight back to all-time highs within the next couple weeks or month, but what it does tell me, what it does show me is that in the near term, if we dip back toward this blue line that I have here, that I noted was like where that constructive look would still be, pulling back to here and maybe even a little bit under, I think that this could potentially be in buy the dip mode. And again, that could change tomorrow, that could change by Thursday. This is a moment in time. As I'm speaking at this moment in time, I would believe that if we dip toward where we closed last week or relative around that area on tech and in SPY down here in like the 325 range and QQQ down at like the 270 range, somewhere in that area, my game plan is going to be to scale in if we get down toward those levels. Conversely, if we just go ahead and go straight for these inflection breaks, then probably we'll scale in and wait for a little dip strength off of that. Like, I note this pretty often, how if you get those key breaks, you can't just go all in on them, right? You have to be patient and scale. It's all about scaling. So maybe you scale a little bit, 1-2 contracts, whatever your risk tolerance is, and then you wait for a pullback and you reevaluate. And if you want a little bit more skin in the game, then you scale in a little bit more. And then if there's strength and it does confirm your thesis, then maybe you scale in a little bit more. You know what, you get what I'm saying? So that's more or less what I'm looking to be doing. So here's our 2 spots, mid 320s, or that spot that I've been noting for the last several weeks, that 342, 343 spot on SPY. At this point, these are the big breaks, 340, 342, and break down again. We could break down again below like 325, and then QQQ. We're real close to that big break. I think the big break on tech is like low 280s, but you know, SPY still relatively has more catching up to do than tech, so we'll see. And then just going over my favorite constructive looking charts. Again, I've been talking about these for several days. Apple, AMD, Amazon, those are my favorite tech stocks right now. They have the most constructive looks to me. So again, similar to what I noted on QQQ, same with Apple. I want to see dip strength. So if we dip back toward 110, 111, somewhere in that area, I'll probably scale in a little bit, wait to confirm, And again, if we don't confirm, then I stop out for a loss, move on with my life. But if we confirm and there's dip strength and then we perk back up and then we, change around some key levels, that's when I scale back a little bit more with a little bit more confidence. But Apple, the big break to me looks to be around 120-ish. So we're not far from it at this point. We're only about $5 or so away from that, what I consider to be that key inflection break. And then, I mean, that could speed back up toward 130 in a hurry. AMD, kind of similar. I don't know why that line didn't work. There we go. AMD kind of similar. I think the big, the key break to look for, not a breakout, but like the key break to look for is like 83-ish. And over that, I think we could speed up toward like 88 to 90 in relative short amount of time. But again, you have to look at these charts and you can't just assume that they're just gonna rip in 2 days straight up here. That's not realistic. And if you're playing end of the week $90 calls on AMD, you might want to reevaluate your strategy. Same with Apple. If you're playing end of week 130 calls on Apple, I'm not a financial advisor, but yeah, that's not really a strategy. That's kind of gambling. So the way I'm playing it, like I tell you guys, it's usually a couple bucks in the money, or maybe like split my position, like a couple bucks in the money and a couple bucks out of the money. And because I like to beat toward intrinsic value on my main position, just because it gives me more confidence watching levels and being able, having confidence, like being able to scale in if I'm in the money. Whereas if I'm out of the money, I have so much more Greek crap to worry about that it comes into play and just fogs my headspace. So like today I was playing the 110s from last week. I was playing the 110s on Apple. I was playing the 75s from last week, this week's expiration, but I was holding it from last week. So needless to say, let's move on. You guys, I've talked about this at this point. Like, I don't know. I feel like it's just beating a dead horse. Like it's the same thing, guys. Same thing, same game plan. We're waiting for this digestion to break up through those key levels. And there's early indications that we are showing that bottom reversal. But again, things change. This LAC, this lithium play, you guys just got to think of this sector. This sector's not going anywhere. It hasn't gone anywhere since May, June, July. I mean, it's stuck around now 4 or 5 months. That green energy sector, lithium, solar, batteries, electric vehicles, all that good stuff. And that money just continues to rotate and rotate and rotate. And there's just, it seems like there's always a new play within the sector. And here we go yet again. This one broke down last week, and it was really disappointing because I had a nice position and I ended up having to just sell for loss because I was respecting my stop on this that day there when it because remember, guys, I was outlining that. Hold on, I'm gonna close this. I was outlining that I was looking to build a swing position, and again, I respect my stop. So on this red candle here, on that gap down, I just got out and was done with it, and then just completely punked and made it up within 2 days. And now look, we're back at 52-week highs. And if I zoom out to, I think I need to go like 15 years because it's been a long time since it's been up here, but we're right there at like all-time high breakout. So anyway, going back to this chart, I'm really just using the low $9, maybe I have a little more wiggle room down into the $8 range as my, hold on, I'm going to do this and then do this real quick because I think it might give better quality. Yeah, that looks better. Not that you guys care about looking at me, you guys should be paying attention to the chart. But yeah, I'm gonna be using like $9 to like $8.75 as like that bottom area to like add into to build a swing into the month of October, because I love the setup. The volume is you can't ask for a better breakout with this volume. Look at the volume for the last forever. I mean, the volume, I mean, go back here, look at the volume. Okay. Look at how dismal that is. And then look at the increase in volume over the last year. And then look at the increase of volume over the last month. These are things that I take note of. And along with this volume is this awesome price action, and we're right back up here at highs. So this is just all in all, it's a great looking chart. I really like the chart. Obviously, I like the sector. Obviously, there's money still to be made in the sector. So this is high up on watch list. Current position is common shares and $10 calls, $10 strike for October in the joint account. And game plan is probably just, you know, add a couple contracts here and there if we dip. And then, of course, if we get toward that $11.50 to $12 mark, again, that's one of those spots where I add into that break, and then I wait for the first pullback to potentially add more into that. But ideally, we get some sideways action over the next week or two, something of this nature where it gives us an opportunity to add a little bit cheaper. And my fingers crossed that this isn't one of those setups that just rips straight to 15, 20 bucks and I can't build that full position that I'd like. Because one, I'll be salty because I stopped out for a loss, because that would suck, but it is what it is. That's trading. So anyway, LAC over 11.50, 12 bucks. That chart, I could see that getting toward like $15, $20 in a relative short amount of time. This KCAC, again, another one. Last week, I had built a decent swing position. I respected my stop, took my losses. And the last 2 days just almost completely made up that punk. But again, very similar to LAC. It's not as sexy a chart as LAC yet, but it could very well come together. Again, that key break I'm looking for is last week's high, like low $20, $21, somewhere in that area. So at this point, and again, the reason why I was so quick to stop last week was because I probably had a bit more size than I should have. And I understood that. And again, it's one of those things that I talk about. I'm always learning. I'm always adapting. I'm always learning. That was one of those examples where on this day, I probably scaled in a bit too heavy, anticipating the break. And then when it didn't break, I don't add to losers. So that's, I tell you guys that all the time. I don't add to my losers. So once we start dipping and that green position, I was probably in my personal account, I was probably like $10,000 or $15,000 green, and that ended up going red. So that's like on my end, just silly. So take my loss, move on with my life. But that's part of the game, and that's what we do as traders. We just need to remain patient. So anyway, again, this is not a forecast or anything like that, but I'm just kind of drawing. You guys know I'm a visual learner, so I'm just kind of mapping out what I'm looking for. I'm looking for something like this, like some kind of sideways, stay in this general channel, and then maybe in a week, 2 weeks, 3 weeks, go back toward that 21, 22 break. And that's when I get more confident in the setup. But until then, it's really more so just keep my size very small, keep it very manageable, but I want to have skin in the game. But yeah, that sideways is really what I'm paying attention to over the next few weeks. This FLUX, Josh has talked about this one a lot. We outlined this one a few times. Josh came up with a good game plan, and we just kind of shot the bed on it. Honestly, we got punked out a couple times, not really just trusting our thesis. I think part of it was last week with the broad markets pulling back. It just kind of gave us that, what's the best way to put it? I've been talking about this. When the broad market's pulling back, it makes it harder to have conviction on your swings like this, for example. So we're much quicker to cut our losses and move on when the broad market's not cooperating. But all that being said, I think it gapped up after hours. I guess they had earnings or something. So I think it tagged like over $9. So it had like a, goddamn, yeah. So like over 60% it looks like after hours, something like that. But anyway, game plan for tomorrow will be just being patient off of open. I'm not going to trade it pre-market or anything like that, but you look at the volume after hours today, it's had more volume after hours today than it's ever had in a single trading day. That's pretty remarkable. So the volume's there. So it looks like the algos have come in. It looks like there's finally attention, maybe that there wasn't a day ago or a week ago. So it's something to watch at the open. And I outlined this before, what I look at the open. I don't want to go into too much detail because you guys already know generally how I play that. But if we wash out at open, I'm going to take a little starter position, scale in. And then if we, you know, something like this, you know, if we open here and then, you know, go for a little intraday dip, and then we trend back upward toward that spot where it opened, which would be right there, right? And then we keep trending toward that spot. I would probably be adding into that break right there, if that makes sense. I've talked about this before. You guys know how I play these intraday ones. I'm always patient off of open. I don't chase gap ups. It's one of the easiest ways to start your day off in a shithole. So not chasing gap ups, just waiting for a constructive pattern to take place intraday. And yeah, we'll go from there. But this is one of those where the float is super small. And I mean, Josh has outlined it. We've talked about it. This is one where if it hit like 20, 30 bucks within a day or two, would not surprise us because it's just got that float. It's in the right sector. And yeah, I mean, we know how the current market environment is. So just be adaptive and be patient. Don't be stupid with it. I'll plow through the rest of these. Just want to note these key levels. WKHS, 2 weeks ago, the high around $32. I want to see this remain constructive and then go for that break. I think it loses its constructive look under Friday's open, but still have it on watch, still paying attention to it, no skin in the game. NIO, pretty similar. A couple weeks ago, that high around $20 and a half, waiting for that break to scale in. And then obviously the all-time high break around $21, scale in that too. But just looking for that $17 area to hold in the coming sessions, because I still think this is a really constructive chart, and I still have it on my watch. I still have price alerts in. I still have it up on my screen. It's still one I'm paying close attention to. And along with those, same kind of general sector theme idea is PLUG. This one's a little more straightforward, just that or I guess it's not all-time high. That's probably 52-week high, but right there at like $14.50. And over that break, I feel like it could hit $17 to $18 within a short amount of time. But again, I'm being patient with it. I'm not chasing gap ups. I'm not even scaling into these right now on the joint or on my personal account. I'm just really waiting for the price action. This FUV, another EV stock, right sector, right place at the right time. That first key break is around $7, scaling a little there, likely scaling a little bit there, and then likely scaling more around that $8 break. And this one's interesting because it's super low float, but it actually has options. So it's really interesting to me because if we break that $7 spot, I might take like a few $100, something silly like $10 calls, and just, you know, assume zero, just kind of tuck those away. And if my $300, $400, $500 turns to zero, whatever, but it's kind of that risk to reward type of thing, because if it randomly gaps up one day, like, I don't know, let's look at, this is a good example, NETE, if it randomly gapped up like this one day, and you had, so, I mean, shit, that gapped up like 150% the other day. So if FUV gapped up 150%, those $10 calls are all of a sudden, they're at 5 cents or 10 cents. They're all of a sudden $5 to $7 in the money or something ridiculous, you know? So it's just worth that gamble for me. But again, those are the key levels there. SHLL, same thing. Was it last week's high? Yeah, last week or whatever that high is from today and last week, 53, 55 area, somewhere around that area. And then obviously back up toward all-time highs. And then just touch base on the mushroom stocks real quick. They didn't follow through with the momentum today. This one kind of an ugly candle today, but as long as it holds above this line, I still believe it can be constructive and set back up. It's a very interesting sector to me. So I don't want to lose track. This being the only listed stock in the sector, I want to keep close tabs on this one especially. But again, if we get down toward like $32 or $30, I might scale in a little bit and just keep a tight stop. Until then, I'm looking for that sideways, really. I'm just looking for sideways. I'm patient with it. There's no rush. There's no rush. I'm not forcing anything. And then off that, we have a couple OTCs. This WUHN, the WUHN General Group. I laugh every time I look at this ticker. I guess it's like from Wuhan, China, like where freaking COVID started. I don't know. It always gives me a good laugh when I pull this ticker up. But anyway, you have to go back a long time to start breaking down levels here. 45 cents though, that level that we broke today, pretty key level. I don't really see any kind of resistance on this chart until like 80 cents. And over that, I don't really see anything until like $1.50. I know on TDA, I had to message the trade desk to place an order. On E-Trade, I was able to execute the order on the platform. I don't know anything about any other brokerages though. But needless to say, I love the look, the volume. Again, it's OTC. The volume's not anything spectacular, but it's something to pay attention to, especially if the main listed stock gets its act together and goes back toward that high. Wuhan, China, keep it on watch. And then this MMEDF, I already kind of made a little visual what I'm looking for, because again, I don't think this is going to just blast straight to $1.50. It needs to digest this move because it's had a really gnarly move over the last week from 35 cents to 80 cents plus, over 100% in a week. You got to expect some sideways. So this is what I'm looking for here. And again, that's not exactly what's going to happen. It's probably not even close to what it's going to look like, but something like that, a little sideways or a wedge or a flag, something like that. That's what I'm looking for there. And then I have one more OTC stock that I have on watch. Again, OTC inherently more risk. So respect the fact that there's more risk involved. But this has a little bit more liquidity than a typical OTC. But I remember this one back in August, huge move. And then it pulled back, lost that constructive look, broke down completely, became really choppy, and then blasted back off last week. And now it's kind of going sideways. So I'm just looking for it to stay sideways and hold like 10 to 9 cents, somewhere in that area. And if it continues sideways and then goes back toward that 14, 15 cent break, that's when this one gets interesting again. But yeah, that pretty much breaks it down. That's pretty much everything I have on watch going into tomorrow and for the rest of the week. Yeah, I hope that helped you guys. I know last night I blasted through a lot of the same stuff, and a lot of the same stuff over the last couple of days. Really, it's just that green energy sector is just a revolving door, guys. It's just like the money just continues to rotate around within it. So I'm just always eyeing the best setups within that sector. And then of course, broad market starting to get its footing. So we need to pay attention to that. Yeah, I think the rest of the week should be interesting with the debate tomorrow evening. So that obviously is going to end up having some kind of effect on futures and then the broad market the following day. So all things to pay attention to, all things to take note of. But yeah, I think that is everything I needed to talk about. I hope everybody has a great day tomorrow. Everybody has a great evening. Everybody has a great day tomorrow. Let's kick ass, guys. I'm out. I got a Ravens game to watch. Ravens 3-0 over the Chiefs. You heard it here first. All right. Peace and love, guys. I'm out.